afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Friday, the 13th. Oh my goodness, Friday the 13th. Here we go. One thing I think a lot of people are kind of forgetting about in the next 8 days. Actually, it's Saturday to Sunday. It's the 17th to the 25th. Chinese celebrate their Lunar New Year, so it's a 9-day long holiday. I think that could be affecting the grain market. So factor that in. It's a couple weeks here where markets may be a little bit dodgy because China is going to be basically on vacation for a week. Imagine if they did that here in this country, right? We had a week vacation. All right. Overnight, lower the corn by a penny. Beans could not hold on to their uh, highs. We traded as low as 27. We're back to 11.30 now as I'm talking to you. The high of the move so far was 41. There's a lot of people that think that we may push our way up to 50. What's driving us? Well, one thing, the funds are long 100,000, maybe 110,000 contracts now. That's a big reason for this. So, um, what's interesting is that while uh, China's talking up buying U.S. beans, right? Another 8 million metric tons, which may or may, they're considering it. I put that in a letter yesterday. It's consideration. That's enough to have given us this big move. But in the meantime, look what's going on in Brazil. Brazilian farmers are just pounding the snot out of their beans and they're going lower. They're anywhere from 40 cents to a dollar lower, depending on where you shop down in South America. Certainly 40 cents cheaper down in South America. So I don't know why China would step up and pay 40 cents more for beans up here. That seems odd. And I think that's one reason, a lot of reasons that we've had this rally, because a lot of people are like, "Oh, we need to sell this rally." We'll see if it has legs, right? The other thing we heard yesterday was that there's going to be a summit or a meeting in April. Well, that's 2 months from now, right? A lot can happen in 2 months. 2 months, that's at least 7 weekends of risk. So that's 7 Fridays and 7 Mondays where we can jump on, whatever some politician says. So I think it's going to be hard, but you're going to have to keep a very big picture and look for areas to make better cash flow. So we're getting that chance there with new crop beans. New crop beans are at 11.19 overnight. The high of the move before was 11.30, so we're getting back up there. March beans again overnight. Now I'm talking to you. They're only down 7. They're trading at 11.30, but we did have another 13-cent range overnight in the beans. And the wheat down a nickel. And if you get my letter, if you're a client of mine, if you have wheat, in fact, every one of my clients that had wheat yesterday, I tried to reach out to them and say, please reward this rally. We had a 3-month rally in Chicago, a 3-month high. We had a 7-month high in Kansas City. And this is right where we failed last time. So nobody sells the high, but if you need to move bushels, I'm a big believer. I like selling in 50-cent rallies. I'd rather sell into 50-cent rallies, no matter what your basis is doing. If you can't sell into it, then absolutely positively buy um, some puts up here on this rally. And let's see what else we're gonna look at this morning. I'm just scrolling through, see what's moving. Stock market's still hanging in there. You had people. It's amazing. We're above 50,000 in the Dow, and then everything's fine. We break below 50,000, and everything's terrible. I think that's going to be our level here for a while. Same thing with 7,000 in the S&P 500. I mean, yeah, we pulled off that high. We've tested 7,000 in the S&P 500 since January 7th, and once again we failed. So in the meantime, is that the sign that we're going to drop from 7,000 to back down to where we were in April? You got to remember, in April the S&P traded, wait for it, 48.32. So we're 2,000 points higher, and people are calling that, a 2-day pullback here, a crash, and that's just bananas. You guys need to sharpen up your vocabulary, because anything less than 5%, 5% or less is noise, and people are going to find that rule out. 5% when the S&P was at 1,500 is a lot different than what it is at 7,000. Same thing in the Dow. A 5% move in the Dow when the Dow was at 2,000. It's a lot different when the Dow's at 50,000, but you can't tell that to somebody that sits on the television all day long because what they want to talk about is the big numbers. This is a huge number, the biggest move ever. You got to remember it's the percentages that matter. I know it's difficult because it's always fun when we have new prices. It's always scary when we dip lower. And we're going to find out today. A little bit of pressure we've had in the stock market, is that going to pressure cattle? That may be something to watch here today. April fat cattle settled at 240.60 yesterday. March feeders settled at 365.72. I'm concerned that if March feeders take out 360, you could open the door to a little bit of a pullback. However, however, I'm amazed at how we held up this week, despite all the negative news with the cattle coming up out of Argentina, and that continues to be. Every other day a new news source will print it like it's the first thing they've ever heard. It's kind of the way media works today. It's like a high school game of telephone. One person picks it up, and then 2 days later, somebody says, "Did you see this?" And then 2 days later, somebody says, "Did you see this?" And so don't get trapped in that. If I'm a rancher right now, I have to look at the big picture and be like, yeah, we've had a tremendous rally. There's lots of revenue there to protect. And finally, in the hogs, talked about this yesterday. It took 6 weeks to rally $19 or 2 months to rally $19. And then in 5 days, we lose almost half. And if you're looking for those levels, those retracements, they are not perfect, but they do attract attention and they can help you do the most important thing, which is to make a decision about your risk. Um, these technicals, I don't care if they're trend lines or they're 100-day moving averages, 200-day moving averages, or if they're retracements, or if they're guys like to dig into the stochastics, overbought, oversold. All those things help you do one thing, which is to make a decision about your risk. You can have, it's like driving down the road with the map. You can get all the signs and signals you want, but if you don't, get off at the right exit, if you don't make a decision, um, what's the point of having the map? Okay, this is Chris Robinson, Robinson Ag Marketing, 312-638-8868. I will be posting my weekly webinar. I'm going to dig into these charts. I was going to do it Tuesday or Wednesday, and we started to move, especially in the hogs. So I'm going to wait here today around lunchtime. I'm going to do that, and I should get it out to you tonight. It's about a 20-minute post where it's a classroom. I share my screen with you and I talk about the chart levels and why I'm looking at. Some people are interested, some people aren't. If you want to learn more about technical analysis and how I can help you make better decisions, it's not going to make you make better, perfect decisions. If that was only true, right? All you needed was a charting program and a computer, and then you could just, the computer would tell you when to sell. You still need to make a decision, and that's what we're here to do. So, all right, guys, have a great rest of the day. I'll be back at it later on. Have a great morning. Have a happy Friday the 13th. Don't buy into that garbage that it's an unlucky day. It's just another day. Take care.